Welcome to ForexTV.com's PM Exchange. It's Thursday, December 27th. I'm Remy Hoki. Today I am joined by Ashraf Laidi, Chief Forex Analyst at CMC Markets. Good afternoon, Ashraf.
Good afternoon, Remy. How are you?
Good to have you on the show today.
Always a pleasure.
Well, in today's session, we've seen continued dollar weakness against the euro and sterling. And earlier this morning, we had weak U.S. fundamental data as well as geopolitical tensions based on the news of the assassination of the former Pakistani Prime Minister. So as U.S. equities have slid in the session, the carry trade has come off on risk aversion. So if you could just give us your take on today's events and how you see that playing out in the Asian session and tomorrow's New York session.
Yes, what was sort of unexpected in today's reaction was actually what happened was not after the assassination of the former PM from Pakistan, Benazir Bhutto. You would expect to see a broad unwinding of the carry trade, but you did not see that. You saw a broad weakness in the US dollar. All right, so that's very important. Yes, the yen did drag the US dollar lower. So that's part of the classic unwinding of the carry trade. But the yen did not go down, did not go up against everything else. Sterling did not go down against the yen. Euro did not really go, it was mainly focused on the dollar story. You saw the dollar falling across the board and against the yen, against the euro, against everything, gold going up. And part of the reason is that, like you said, weak fundamentals. The jobless claims number going to around 349,000, that's bad, because anything above 350, 360,000 in payrolls is going to ring the bells of recession or slowdown. And it was the highest level in over 2 years, Remy. Jobless claims is something we get every week, but it should not be taken lightly. And like you said, the durable goods orders was very weak. So it was really the weakness story, especially on the back foot of yesterday's bad housing price numbers.
Okay, well, Ashraf, while we're on the topic of economic data and the Japanese yen, overnight in Japan we have a slew of data coming out, including CPI, retail sales, and unemployment. But going into year-end and also kicking off 2008, if you could give us your forecast for the yen against the dollar.
Yes, the yen seems to have been weakening across the board, especially against the dollar, with the BOJ mentioning the word rate cut in their minutes. However, after today's news, Remy, they do change the structure of the foundation of the US dollar in the short term after today's events. And that's why I think that what was about to be seen as 114.80, 115, that resistance is now being lowered towards 114.20 and 114. And I really think that we are talking about 113.20 and 113 as the next support. These numbers would matter. I think the CPI would be very important.
Okay, and let's take a look at the euro currency. We saw it gain to a record high against the sterling. And also taking a look at euro dollar, we saw it hit a high of 146.39 in today's session. So if you could tell us about euro dollar and euro sterling and why we've been seeing gains in today's session.
Yes, look, the sterling, as you know, as everybody who has seen me more than 3 times this year, I'm not a fan of the sterling. It was actually the second worst performing currency in 2007 after the US dollar. Everybody's talking about the sterling going above $2, but the sterling was the worst performing currency against everything after the US dollar. That's part of the reason why it is at all-time lows against this strong currency called the euro, whose central bank is talking about inflation the whole time. And yes, there are signs of weakness, but not that much. Okay, so the sterling has to go down against this strong currency called the euro, and the sterling would have to. Yes, of course, it did go up against the US dollar today. However, we do really think that the resistance in sterling is going to be, we had a year-end target for sterling at 201. We think that we're going to see we think we're going to see around 202 20050 and maybe 201 as the big resistance for the year, Remy. But I think that sterling has more downside into the next few weeks to retest 196, because we think as much as 100 basis points of rate cuts by the Bank of England is coming up this year, and so that's why I do not like sterling. As a matter of fact, I think it's going to be one of the dogs, the worst currency next year.
Okay, and before we move on to the so-called commodity currencies, while we're still discussing the sterling, earlier you mentioned that sterling and Aussie dollar, that's your favorite pair going into 2008. So if you could briefly tell us why this is your favorite trade.
Before I answer this question, I just realized that I did not tell you what I thought about euro dollar in the previous question. Euro dollar, I think it's 146.60 is really the big resistance there, and 147 is a huge resistance, but I think 146.60, I think we should be coming back down towards 145.50. To answer your question, my best trade for the year for 2008 is to go long Aussie, short sterling. Why? Because the Australians, if it has not been for this turmoil that we're seeing, for this unwinding of the carry trade, the Aussie would be going across the board. We have seen it was 6 cents away from parity against the US dollar. And if you take what I think is going to be the worst currency, which is the sterling, I really think that Aussie slash GPP is going to be testing 0.47 as a medium term resistance. People are saying, what, Aussie sterling? No, it's usually sterling Aussie. I'm sorry to sound like the marketing person, but with CMC markets you can actually trade. You can trade Aussie slash sterling because it is cheaper for you as from the margin point of view. If you're going to short or buy, if you're going to short Aussie sterling, it's going to cost you 0.47. That is much cheaper than the 2.27 sterling Aussie. But so basically, either way you cut it, we think that the RBA could be raising rates later this year. 100 basis points down by the Bank of England. Long Aussie, short sterling. This is the way to go, we think, for this year, for 2008.
Okay, and last but not least, while we're still on the topic of the so-called commodity currencies, if we could briefly touch on dollar CAD, CAD yen, and also the Aussie dollar against the US dollar. So in terms of your technical perspective as well as fundamentals, if you could briefly give us your forecast for the commodity currencies.
Yes, you cannot talk about commodity currencies without talking about oil, and even the oil experts have got it wrong, but I think that really dollar Canada, I think really is a big resistance around 107. 107, I think there's a big resistance. I think that a lot of people are expecting the Bank of Canada to be cutting rates again in January. We think they will probably cut rates only once, and then they may raise rates later on. We think that we're going, so even though we are around now and at 98, we think further unwinding of the carry trade is actually going to help the US dollar, lift it towards probably 103, 104, big resistance at 105. So right now I would not be a buyer of the Canadian against the US dollar right now. I would wait a little bit. The Aussie, I really do think that we need to go back up towards 94 and then 97 against the US dollar. So which of the commodity currencies do I like? The Canadian or the Aussie? I like the Aussie. You will get hit by the unwinding of the carry trades when the stock markets fall, and that will weigh on the Aussie. But the only thing that is hurting the Aussie is something that the Aussie cannot even help. Australia cannot even help, which is what? Which is a falling stock market. But if you expect crop prices to go up, food prices to go up, copper maybe to be okay, and that will be upside for the Aussie.
Okay, well, Ashraf, we'll keep an eye on that, and thank you very much for coming on the show today.
Thank you very much, and Happy New Year, Remy, and Happy New Year to everybody over there.
You too, Ashraf. Thank you.
Thank you.
This has been your Forex News with Ashraf Laidi from CMC Markets. Next up, we have your equities and commodities wrap-up for the day. U.S. stocks ended the session in negative territory with steep losses. The major indexes tumbled today following news of the assassination of former Pakistani PM Benazir Bhutto. Pakistani opposition leader Bhutto died after a suicide bombing attack that also killed others at a political rally. In today's U.S. economic data releases, the Conference Board's Consumer Confidence Index rose to 88.6, which was better than expected. November's reading was upwardly revised to 87.8. The Commerce Department reported that durable goods orders were up 0.1% in November. Ex-transportation durable goods orders fell by 0.7%. And U.S. initial jobless claims climbed 1,000 to 349,000 in the week ended December 22nd. At the closing bell, the Dow Jones Industrial Average tumbled 192.08 points to end at 13,359.61. The tech-heavy Nasdaq fell over 47.5, ending at 2,676.79. And the S&P 500 fell 21.29 to close down at 1,476.27. In the fixed income market, U.S. Treasuries rallied on the news of the assassination of Bhutto. The benchmark 10-year Treasury note rose, with the yield at 4.2%, down from 4.29% yesterday. The 30-year long bond gained, with its yield at 4.63%, down from 4.69% yesterday. And the 2-year note advanced, with its yield at 3.22%. And taking a look at energy, crude oil futures rose today above $97 a barrel. This came after government reports showed that U.S. crude inventories fell for the 6th consecutive week. Earlier today, the EIA reported that U.S. crude inventories fell by 3.3 million barrels in the week ended December 22nd. Meanwhile, refineries operated at 88.1% of capacity last week, up from the previous week's 87.8%. Meanwhile, geopolitical tensions weighed on gains for crude following news of Bhutto's assassination. At the end of today's session, crude for February delivery closed up 65 cents at $96.62 a barrel. Meanwhile, January gas futures gained 4.36 cents, ending at $2.4962 a gallon. Futures hit a record high of $2.5085 in the session. And taking a look at heating oil futures, January heating oil futures added 3.91 cents to settle at $2.6803 a gallon. Natural gas futures rose 12.6 cents to end at $7.172 per million BTU. And over in the metals complex, gold futures rose for the 4th session in a row. Prices ended up above $830 an ounce. Both the U.S. dollar weakness and geopolitical concerns lifted the precious metal. The benchmark contracted an intraday high of $835.50. February gold ended the session up by $2.30 at $831.80 an ounce on the NYMEX. In other metals, March copper ended down 3.8 cents at $3.132 a pound. March silver lost 1.7 cents to close at $14.818 an ounce. This afternoon, I'm joined by Tom Puckett, commodity broker at KS Futures. He'll recap today's action in energy and metals and also give us his short-term outlook.
Good afternoon, Remy. Thank you very much. It's been a short week, of course, with the Christmas holiday. A lot of the traders in the various floor areas are actually not there. The crowd seems to be a little thinner than normal. Frequently you'll see quiet trade and occasionally a little volatility just based on the fact that volume tends to be down in the holiday break between Christmas and New Year's. Of course, this last period of time in the various markets, energies as well as the metals, we've had some interesting world events and as well as local events that have had a pretty strong influence on the markets. Of course, last night we had news in of the assassination of Pakistani former Prime Minister Benazir Bhutto, who was assassinated at a rally, political rally, and also a bomb went off that killed a bunch of bystanders there. So that has put a very definitely a strong influence into the metals market, pushing the metal a little higher. The gold, whether the carryover of the event is that strong or not, is really undetermined in the metals market. But as we look at the gold, looking at the December delivery, still front month, we're trading in and closing out today at about 828.60, and that tends to be pretty strong, although it's not the high of 848 which we saw here a month or so ago. It could be that things could fall out from that. The fact that Ms. Bhutto was not actually a government agent or government official perhaps has diminished some of the impact of that, but nevertheless there was a response in the gold market. And silver, on the other hand, has not taken the same run, although there was an initial fluctuation there as well. Silver's trading in the settled today on the February contract at 1472, and it's down about 5 cents from where it was on the close yesterday. So the metals may recover, although they are stronger on the gold side, which is the strong brother of the two primary monetary metals. Prospects for the future, I think profit taking could take place. First of the year comes, we may see some sell-off simply because people that may have profitable positions may in this country be taking them off for tax purposes. At the same time, there may be some carryover for similar reasons, although different tax perspective. These things do come into play at the end of the year. I would not be surprised to see the gold and the silver go a little deeper in the pricing to take some profit out of the market. The main interest has been, for me, the energy market. We have crude oil trading strong again, up 80 cents. Currently, we're looking at $96 to $97 pricing. High today on the February delivery on the electronic market was $97.79, so that's up pretty good, about $10 or so from where we were here just a couple weeks ago. We had an interesting report from the IEA yesterday. The crude oil and heating oil inventories were lower, and they'd expect them to be lower, but not as much as they were. Natural gas also was down. The assassination of Mrs. Bhutto in Pakistan has certainly brought some uncertainty into the crude oil markets because that part of the world is so closely related to the energy markets. And this is probably the motivation that affected the gold in particular. Crude oil on the report was down 3.3 million barrels, where they expected to have 1.3 decline. It came in 2 million lower, which strongly impacted the market to higher prices. Interestingly, the refinery capacity is 88.1%, which is up 0.3%, but still it's under 90. And for the longest time earlier in the year, we were at the 90, 93, 95% range. Gasoline actually was up 700,000 barrels, but they were expecting a 1.4 million barrel increase. So again, an increase, but not as large. The estimates kind of created the market in advance, and then the realities came in and washed them away a bit. Distillates, that's the home heating oil as well as diesel, they were down 2.8 million barrels, and that's strongly over the 800,000 barrel decline, a little over about 3.5 to 1 comparison. Crude imports were up, gasoline imports were up, and as well the demand for gasoline rose. So what we have here basically is kind of an energy crunch based upon demand as well as inventories. The rest of the week, of course, Friday tomorrow will be end of the week for the short week we're in. Anticipating a short week next week with a short trading day on Monday, the day New Year's Eve before New Year's. Will the wheat markets come back to more normal trading volumes and things at the middle of next week? Probably, but the real test will probably come about 2 weeks after the holidays have passed. So right now, the international incidents that have taken place, as well as inventories and the crude oil, have served for higher prices. Look for that to continue for a while, but somewhere along the line, someone's going to probably trip the switch to profit taking. So that's what we might be looking for. Remy, thank you very much. Talk to you later.
That was Tom Puckett, commodity broker at KS Futures, with his commodities commentary. And that's it for today's edition of PM Exchange. I'm Remy Hokie. Join us tomorrow morning for your latest news update right here on ForexTV.com. Have a good night.